Hello and welcome to session 5 of our basic group accounting course. This is a very simple one. We are just going to practice what we've done so far through an example. So we're going to do illustration 5, statement of financial position for virtual and insanity. As per usual, there is a pro forma in the Excel workbook, which I'm sure you have downloaded by now. This is pretty similar to the one we did in the last session, illustration 4. You'll need to do your workings 1 to 5. There will be some post-acquisition profit, which we learnt how to deal with in the previous session. So I'm just going to pause, allow you to have a go, and then I'll take you through it and we'll see how you get on. So pause the video now, have a go, see how much of it you can get, and then work through the solution with me. Okay, hopefully you've had a go at this. Let's work through it, see how we do. We've got statement of financial position for virtual and insanity. Looking at the details we need for our group structure, starting with the year end. Well, the year end is 31st of December, X5. And we purchased them 1 year ago. So there's going to be some post-acquisition profit. We acquired 60 shares. They had a total of 100 shares. So that's going to be 60%. And the amount paid, well, they show us up here, investment in insanity, 600. So year-end date, 31st of December, X5. Date acquired 1 year ago. Parent percentage 60%. That means the NCI must be 40%. And the amount that was paid was 600. Very similar to what we saw last time. Again, you start to see that the important thing with group accounting is practice the same thing over and over. Okay, now we've got our equity table. Same as usual, start with the year end. So we've got 100 and 400. The acquisition date stays the same, share capital doesn't change. The retained earnings at acquisition will be given to us in the question, and they were 60. So there we go, 60, which means we have a movement over here of 0 there, and then we've got 340 in retained earnings. So if we add this up, the net assets at acquisition were 160. By the year end, that had moved to 500, and that movement is 340. That is the post-acquisition profit. Again, as long as you know the workings, everything from this point on is downhill. The cost of investment we noted in working 1. The fair value of the NCI at acquisition, well actually that's given to us over in the question. Fair value of the NCI 120. So that's 120. The net assets at acquisition always come from here in working 2, column 2. Which means that the goodwill is 560. So goodwill is 560. What about the NCI and retained earnings? Well, the NCI at the acquisition date we already used there in our goodwill. We need to share out that post-acquisition profit coming from the movement. So the NCI percentage, remember, was 40. So it's going to be 40% times the 340. So equals 340 times, well, I could just use that 40 there. So 340 times 40% is 136 to give us an NCI of 256. The parent's retained earnings from the question, There they are, cumulative profits 750. And then we give them their share of the post-acquisition profit, 60% of the 340, which is 340 times 60%. That gives us retained earnings in total of 954. Again, you should be seeing that this is very similar to what you did in the previous example. Each example builds upon the next. And that enables us to pull together the statement of financial position, the goodwill from working 3, add across the assets and the liabilities. May as well just do those while I'm at it. The parent's share capital, well, I'd already stuck it in there, so is 800. The retained earnings are 954 and the NCI 256. Now hopefully when we add this up it'll balance and we'll know that we got everything correct. There we go, 2960. Indeed, it does balance and we know that everything's in there. Again, the important thing with these group accounting questions is practice. They're very similar, but they do build. So we're going to see as we go through future questions, little complications will come in, but as long as we've got the basics that we've done so far, we should be able to deal with them as they come up. So practice is the key, and then you can move on to session 6.